Good evening, everyone. Thank you very much for taking a few minutes to come and listen to me talk about Burford. Some of you are familiar faces. I've seen you here before. To the extent that you being here before resulted in you becoming investors, thank you so much for your confidence. And we are proud to have been able to deliver you some pretty interesting results since the last time I spoke at the Shares Conference. For those of you who have not heard the Burford story before, I'm going to explain a little bit about what we do and how we do it. I'm going to walk through this at a relatively brisk pace. This is going to introduce to you an area of investing that is probably new to you. And I'll be happy to take your questions after that. And there's an abundance of material on our website that talks about the business and what we actually do. This page here gives you in one place a snapshot of some key financial performance metrics here. As you can see, the business has been building nicely over the last few years. And because Burford is fundamentally a specialty finance provider to the legal sector, what that basically means is that what underlies this investment portfolio, the way that we make our money fundamentally, is by providing capital against legal and regulatory claims and managing legal and regulatory risk for big law firms and for corporate clients. And as a result of that, many of you are going to sit here and say, gosh, I invest in all sorts of different industry segments, but I don't have any exposure at all to the legal sector. And the reason for that is, unless you happen to hold one of the couple of publicly traded law firms in the world, there's virtually no way for you to get access to the legal market, to the legal sector. And so as a result, you probably haven't thought about law as an investment vehicle. You probably only thought about law in the context of what you see on TV or your business life. But the truth of the matter is that you already know everything you need to know about the basic operation of law and court systems to understand what our business is. And one of those fundamental things is that you all know that if I commence a lawsuit against you today, we're not going to be in court going to trial tomorrow. Instead, we're going to be waiting quite a distance of time for that to occur. And the reason I say that at this point is that when you look at these returns, what has happened to Burford over time is that when we started off, and Burford launched at the very late part of 2009, so we're about a 7-year-old company now. When we started off, what that meant is the first thing that we had to do was go and assemble a portfolio of litigation finance and other legal investments. That took some time. And then the next thing that had to happen was that sometimes laboriously slow judicial process had to do its work before we actually turned those investments into something that produced income and profit. And so as a result, if you look back over Burford's history, what you see for the first several years is frankly a pretty sleepy story because not very much was going on. It was a little bit of a black box. It was a little bit of a trust me kind of story. And some investors were willing to take a chance on being exposed to the legal sector that way. But what you now see in the results is two things going on. One, you see the income and the profit that is coming from those investment decisions that were made several years ago. And those, because the volume of the business began to accelerate fairly rapidly after we started it, the result of that is that you have seen that historical trend of acceleration over time. But those are investment decisions that we made a while ago, and you're now benefiting as shareholders, if you are, from the velocity of those investment decisions. The other thing that is going on in the business, and this is the bottom right-hand box here, is that new investment velocity has been significantly increasing as well. And the reason for that is that Burford, as the global leader in this market, has taken what used to be a relatively nascent, relatively esoteric product in the legal sector. And over the last 7 or 8 years, as law firms and corporate clients have come under steadily increasing pressure on regulatory spending and regulatory compliance, on litigation volume, what you've seen is that esoteric product become mainstream. We're still at the early adopter stage of where we are in this industry, but nonetheless we see significantly more volume than we did even a few years ago. And so what that chart in the bottom corner represents is effectively the future. because the money that we are putting out the door today, that $378 million that we did this year, that's going to ripen and mature going forward. It's not something that you're going to see coming into income next year. These are just some very brief numbers, but as you can see, we've been putting up nice shareholder returns. I think it's important to emphasize that I don't believe these are annually repeatable shareholder returns. What you've seen, I think, instead is the market coming to terms with the fact that this is a large and interesting investment proposition. So much as I was very pleased to deliver those kinds of almost 300% returns in a single year, please no one go home and believe that that's my annual goal for the business. You do have, however, a very committed management team. 24 members of management hold almost 15% of the company, and we're long-term holders of this stock. And this is fundamentally an equity-based undertaking. We do have publicly traded debt as well, and a number of people in this room have historically bought either the equity or the public bonds, which I confess are listed on the other exchange, or both. And so both of those are investing options that are available. And in fact, last year, we were just in the middle of marketing some new public debt that has done quite nicely for people that took advantage of it. But the fact of the matter remains that this is not a levered business. I'm going to say very quickly just a couple of words about what this business is and what it does, and then I'm going to talk a little bit more about our actual performance. So you sort of say to yourself, what is this? Why is the legal sector all of a sudden taking advantage of external capital in the way that for tens, if not hundreds of years, it had not done so before? And what you're seeing here is all about the combination of cost and volume. And again, you sort of know this from living in the world. You know that there are a lot of lawyers. You only have to look around the city of London to know that. You know that lawyers are pretty expensive, and you know that there's a lot of litigation. But let's put some numbers around that to just sort of frame it out. We do business all over the world. Our market is every English-speaking common law country, as well as some special situations beyond that scope. But if you just look at big litigation markets, the US and the UK, looking at the US, there are 40,000 law firms in the United States. If you just look at the largest 100 law firms, they're generating more than $80 billion of annual revenue. Those are revenue for them is simply the amount that they're billing to the clients. And they're doing that across an enormous pool, an enormous volume of litigation. So if you look at litigation numbers, again, just using US data because it's publicly available, there are more than 280,000 new federal civil claims filed every year in the United States. That doesn't include litigation that happens in all 50 state courts, which is where, if I was to have a fight with you tonight and we ended up in court together, we'd be in state court, not in federal court. Federal court tends to be larger and more complex claims. So I don't pretend that this is the addressable market for this business. The addressable market is clearly significantly smaller than that because there are lots of these claims that either I wouldn't like or the clients who are bringing them have no interest in financing them. But the fact of the matter is, in the 7 years that Burford has been in existence, we've built a book of fewer than 1,000 claims. During that same time, the federal court system in the US alone created more than 2 million of them. So it's not surprising to me that there's demand and growth here, and I think this is illustrated by that large circle that there's room to grow. So what's going on and why do people want to do this? Let's start with you as investors. Why is this interesting to investors? Litigation is a fundamentally uncorrelated asset. And again, you know this from your life experience. If you start a lawsuit against somebody, you're effectively pushing a button on a big conveyor belt that is the justice system. And that conveyor belt is starting to move forward. It will move forward at its own deliberate speed. It may twist, it may turn, it almost certainly will go slower than you want it to go. But it will move forward, and it will move forward inexorably, and it will come to an end. And what that means as a matter of investment is that you have an investment process that is entirely divorced from the stock market or from the broader economy. It just does its thing the same way that it's been doing it in the English courts or the American courts literally for centuries. And so you get those results. I don't have to do anything in an investment to generate an exit. Once upon a time, I ran a tech media investing vehicle, and that was both successful and fun to do. But one of the challenges with those kinds of investment vehicles is that however good my portfolio is, at the end of the day, it's only good enough if I can find a buyer for those interests that I've created. I don't need to find a buyer for these. The justice system delivers me an exit in the form of a judgment in every single investment that we make if they don't settle beforehand. So you have an uncorrelated, pretty high return business delivering you automatic exits. So what you're going to say now is, but isn't litigation inherently risky and unpredictable? And the answer to that is absolutely yes. And one of the risks of this business is the fundamental potential for volatility, especially period-to-period volatility in this business. But let's look at a fundamental structural element of litigation, which again you all know. There are three possible results to a piece of litigation. You can win, you can lose, but the third result, which is by far the most common, is that the parties will settle. And you know this in corporate litigation from the number of times you see a company putting out a press release announcing the beginning of a piece of litigation compared to the number of times you actually get to see the spectacle of a CEO testifying in the witness box. In fact, when you go and look at the numbers, more than 90% of all civil litigation settles. And the reason that that's so important as an investment matter is that you all know that you're not going to settle for zero. If I'm suing you today, and the best offer that I can get from you to resolve this matter without going to trial is nothing, I'm not going to take that offer. I'm going to keep on going. So settling litigation is generally a cash-generative undertaking. Most cases settle, and most settlements produce positive cash flow. And so you're starting from the proposition that most litigation moves cash from the pockets of the defendant to the plaintiff. Then you add those wins and losses. And the thing about wins and losses is that they are fundamentally asymmetrical. When you lose a piece of litigation, you're losing the legal fees. When you win, you're winning whatever damages that you claimed. And unless you're irrational, you're not going to be litigating, you're not going to be spending more on the litigation than the possibility of recovery. So what that means for a firm like Burford is that you have a relatively principle protective approach to investing on the downside. You would have to have a very significant pool of losses, much more than even sort of non-diligence losses before you lost principal here. And you do have that potential upside associated with both those wins and the cash generative settlements. And why do law firms and companies do this with us instead of doing it themselves? Law firms use our services because law firms, except for the one law firm in this entire country that is publicly listed, other than that one law firm, and by the way, the number is 0 in the United States, other than that one law firms don't access the capital markets and don't have balance sheets. And so when clients come to them and say, please, I want a deal other than pay by the hour for your time, the law firm's answer to that is, I have no balance sheet. I don't have the ability to give you that result. That's where Burford comes in. Burford stands in between the law firms and the clients and provides that necessary external capital. And by the way, the clients are after this, not only because they're spending way too much money today on regulation and litigation instead of on growing their businesses, but they're also after these solutions because litigation is an invidious market value destroyer. Why is that? Because you as investors don't give companies multiple credit for litigation recoveries. If I go and spend $20 million as a public company, I used to be the global general counsel of Time Warner, the media group. Time Warner trades on EBITDA. Let's hang a 15 times EBITDA multiple on Time Warner to make the math easy. If I go spend $20 million on litigation for Time Warner, I've just reduced EBITDA, increased operating expense by $20 million. 15 times multiple, I've just reduced market value by $350 million. Now that's okay if I'm doing an operating business. Businesses do that all the time because the expectation is you'll make more money from the revenue that those costs are generating. And my litigation is going to pay $100 million for that $20 million invested. Sounds like a good deal. But you're not going to give me a 15 times multiple on that $100 million. You're going to treat it as cash and give me a 1 times multiple. And the result of that is I've actually, even though I've made a really fat cash profit on litigating for Time Warner, the result is that you've in fact seen an actual permanent destruction in market value. And so it's not any surprise that as companies are continuing to see more and more litigation, that they're interested in off-balance sheet solutions. The news for us since we were last here, in addition to performance generally, is that we were a public on-balance sheet investor, and we have now gone and acquired the largest private capital manager, the largest investment manager in the space. So collectively, we're sitting at about $2.3 billion of activity in this sector, and in terms of track record, we've already recovered more than $1 billion for our investors at the kind of returns that you see there on the screen. This makes us by far the largest player in the space, more than 4 times the size of the next competitor. It gives us clear global leadership, and it gives us an unparalleled platform, including 90 people, and 40 of whom are lawyers in multiple countries, to pursue this business all over the world. This one page gives you a little bit of information about the way the investment portfolio actually performs. And what you see in the top left corner is the historical performance of concluded investments. And what you see there is a pretty consistent collection of returns, whether expressed on an IRR basis, annualized, or whether expressed on a single return on capital basis. That's the top red line. So we're running at about a 60% return on invested capital. This is just in the investment portfolio, and that translates into IRRs that have historically been in the mid-20s. What you see also on this chart is that bottom right-hand corner, which is duration. And again, consistent with what you would expect, it takes a couple of years for these investments to go from beginning to end on average, and there's enormous deviation from that mean. We've had investments conclude in as little as 5 days, but we have some that are still running at 8 years on. And so this is also about running a widely diversified portfolio with real portfolio construction going on in it. And as you can see from the top right, this business is highly cash generative. And so we're now at the stage of this business where we are not only paying a nice dividend and covering our expenses, but we're able to reinvest a considerable amount of cash that is returning to us in new investments, which lessens our need for external capital. That, of course, is translated into a number of years of earnings growth. And this slide is really about the future. This shows 2 important things. One is how much each year we have been putting away in new investments in the market. And as you can see, 2016 was a record-breaking year in terms of new investment volume that sets the business up for future performance. But the other important part of this is what you see on the right, which is the business has continued to migrate from single case investing, where we're providing financing against one single litigation matter, which carries with it binary risk, to financial solutions, more complex financial solutions, where we tend to be putting multiple litigation matters together in a single investment. And the reason that that's so significant for us is twofold. One is that it decreases binary risk, and the second is that it enables us to do considerably more volume. You know, in 5 or 6 years ago, our average investment size was about $3 million per transaction. You know, there's no way that we would have been able to do 120 investments in a single year at $3 million a shot. Now our average investment size is somewhere around $13 million, which is what's driving the ability to grow and scale the business. And so as a result, you end up with a litigation investment portfolio that looks like this. $550 million in current investments on the balance sheet, another $290 million waiting to go out the door, for a total portfolio with potential returns of $839 million. I'm going to say one word only about the Petersen claim, which gets attention merely because research analysts have liked to write about it. And I'm going to start this with a health and safety warning that I really mean. The important thing about investing in litigation is to do it through a diversified portfolio. It is extremely difficult to do single case predictive investing, and it is considerably more risky. And so nobody should be buying or selling stock based on a presumption about the outcome of any single matter. And that's not just boilerplate. I really mean that very seriously. The reason I put that big caveat out there is that it has become publicly known that one of the assets in our portfolio is a potentially quite large matter, which if it doesn't lose, and every litigation has the risk of losing, if it doesn't lose, it has the potential of throwing off pretty considerable returns. And so you could think of there being a little bit of option value associated with the future potential of this long-running matter. And the market, the secondary market, is aware of this, and we actually sold a 10% interest in this matter for $40 million, which implies for us right now about a 20 times return on our investment to date. So with that, I am out of time, and rather than take you through a whole lot of more slides about a variety of more details of the business, I'm going to stop and let you ask me questions and see what we can illuminate here.
Thank you very much. Christopher, thank you. That was excellent. Do you have any questions, please? Gentleman in the front here, please, Chris.
I was at the first presentation you made for Shares Magazine, so thank you very much for all very hard work, and as you can imagine, I'm very happy.
Well, thank you for your support.
Basically, I'm just wondering where the future goes. Are you going to expand organically, or do you think you might be taking over one or two other people as well? Because obviously it's a bit of a fragmented market as well, from what I can see.
So my general view about expanding by acquisition is that I've done M&A throughout my career, both large corporate and smaller. I'm perfectly happy to be opportunistic. I'm very opposed to overpaying. You've seen us do 3 acquisitions over time. The first one was an insurance company that has been remarkably successful, and there's a slide later in the pack that you can look at that shows the acquisition price against the outcome. I think by the time we're done there is probably a 5 times return in 5 or 6 years. So I'm certainly open to the ability to do that, but I'm perfectly happy with our ability to just grow organically as well. And what you see in terms of growth generally in this business is a couple of things. I said at the beginning that this was, even though Burford had grown quite nicely, we remain this tiny fraction of the litigation market generally. So there is real opportunity here just for getting more people to do exactly the same thing. You know, we are not even coming close to penetrating just core legal markets. There are entire big American cities that are top 20 litigation markets that we haven't even done a single matter in. So there's expansion potential just to keep on doing the same thing as the market becomes more and more and more familiar with the offerings. But at the same time, the client base that does use our capital is looking for increasing diversity of products. So we keep on doing more things for those clients. And at the same time, this is becoming an increasingly global business. For example, Singapore, after 3 or 4 years of lobbying by Burford, a couple of months ago passed legislation opening the Singaporean market to us. So you see growth happening here, both sort of horizontally and vertically, and possibly by acquisition.
Thank you. A question at the front here, Chris.
With your market size now for the AIMS market, do you see you opening up in other exchanges? Obviously, with incredibly.
Is this a sell?
No, I would.
I know what you're asking.
So I was specifically thinking of USA or Singapore,
right.
Obviously, because the Chinese market is a huge potential one, and
right.
Obviously, if you need more capital,
right.
I'm sure it's there.
I think for us, I think the last thing that you said is really the key point. So Burford has taken advantage of the availability of the retail bond market. And we've done 2 successful retail bond issues. You know, and it wouldn't be shocking to me if we went and tapped that market again were we to need incremental capital. I think that probably today, that's what we would do in addition to accessing the private fund market that we have accessed through this acquisition that we did, as opposed to going and doing a new equity issue. You know, I never say never, but that's not something that I'm about to go and do next month. In the absence of a new issue, I think probably I would not engage in the cost and additional effort to go and list on a second equities market. Probably I would save that for when we would do a sizable equity issue. So that would be my current view. And that's fundamentally a desire to put the costs of the business towards growing the business as opposed to the market.
Any other questions, please? David?
Yeah, Chris, new to the story, very interesting. Just get me straight here. So this is funding pro bono cases, effectively. in layman's terms.
No.
So give
Think
me
of
a
it this,
client that...
think of it
I
this
mean, I'm a big user of legal fees all over the world. Now, explain to me
Yeah.
why I or one of my lawyers would come to you and in what situation.
Think of it this way. A piece of litigation is an asset. I know it seems strange to think of it in those terms because you're accustomed to thinking of litigation in a television drama way. But a piece of litigation is nothing more than an attempt to get money to go from him to you or from you to him. And so that now starts to resemble something that all of you are more familiar with. That sounds like a receivable, or it sounds like a debt. And that's exactly what it is in both legal and financial terms. The moment you have a claim, you have an asset. And that asset is capable of being financed, sold in many cases, certainly pledged or secured. And so what you are seeing companies, and this isn't pro bono, this is corporate commercial, what you're seeing companies come and do now is say, gosh, we have asset value sitting here from pending or as yet unasserted claims. And at the same time, we're exhausted by how much money we're already spending on regulatory compliance, on litigation defense, on the other things that we're doing in the business, let alone the market value point that I made to you earlier. And so we're looking for ways other than this traditional pay the lawyers by the hour model to be able to advance these litigation claims.
So do you advance money to the lawyers or do you advance money to the clients?
I advance money to whoever has the economic interest. So often that's the client, but sometimes the client and the law firm will go and make an arrangement that I will then finance for the law firm. But what I'm ultimately financing is the same thing. I'm ultimately financing the ultimate interest in that asset. And that asset is the question of the debt that you claim he owes to you. Now, you may lose, in which case the asset isn't worth anything.
So how do you judge whether you want to take that risk as
I have 40 lawyers and hundreds of years among them of complex litigation experience from some of the world's leading law firms. Yeah. And we do hundreds often of hours of diligence on these matters before we make an investment decision.
Right. So you've got 3 minutes left. I'll leave time for one more person to ask a question.
There's a hand back there behind you already, yes.
How many do you turn down?
The vast majority. Sir.
I have read and noticed from my reading that it's in the nature of litigation for accounts that are obviously presented by Burford to be somewhat very complicated for the lay readers. Is there any chance of making it more accessible, as it were, or digestible? Because really, I mean, you know, you read an update or a report, if you can't understand the numbers and the comments, it's unfortunately almost like a handicap for the retail investor.
So let me suggest the following. Number one, if you actually read the front half of our annual report, and they're going to be outside, we write that in a, the good news about being a company run by lawyers is we know what we can say and how much risk we can take. So we actually write a very plain language annual report that explains the business that we get actually quite a lot of compliments on. So I'd recommend, first of all, you read the text of the annual report. And it's actually more like a story. The second thing I will tell you is that I agree with you in the sense that I don't think IFRS accounting is particularly, well, I think IFRS accounting is problematic for a number of industries, but it's not particularly well designed for law and litigation, which is why we give you obviously Ernst & Young's audited IFRS accounts, but we also give you separately portfolio cash-on-cash data. And so you can look through the data that we provide both in the annual report and on the website, and you can actually track investments. You can see, we tell you for every single investment we've ever made, how much money went out, how much money came back, what the return was, and so on. So you can get a sense of what the portfolio is doing, even though the gyrations of the IFRS accounting can be less than clear sometimes.
I mean, will you be sort of accessible if, let's say, as a retail investor, I rang you and asked for some explanation? Or
In fact, we have a decent number of retail investors who contact us, and we absolutely reply to them. Email is the best way for us to do that, and we often reply very, very quickly. We've been complimented on that too.
I think that's probably it. Christopher, thank you very much.